Hello, 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 and good evening, everyone. It is so great to see so many familiar faces back tonight. If you are attending a class with Habitat for not the first time, if you are a repeat client of ours, send us a note in the chat. We want to hear from you. I recognize some names of people who are here tonight. And if this is your first time attending a class with Dallas Habitat, welcome to you. My name is Blaine Cowart. I am the Vice President of Homeowner Services here at Dallas Area Habitat for Humanity. I have the pleasure of working with our amazing counseling team, who many of you all are working with one-on-one. And so tonight's class is a topic that we are really incredibly passionate about here at Dallas Habitat. And we want to make sure that you guys get the information that you need and also have the chance to get your questions answered on this really important topic. And so if you've been tagging along with us the last couple of months, then our partners at Comerica Bank are no strangers for you. You know that we've done 2 classes so far this year. Tonight's class is our 3rd class in our series so far. And tonight we're talking about the importance of being banked, having a bank account, having potentially more than one bank account. And we're going to talk a little bit about, number one, why it's so important to have a bank account and to be hopefully putting your money in that account, safeguarding your money in that account. And then we're also going to get into some of the details about different types of accounts and what you need to know about selecting the type of vehicle that you're using to safeguard your money, depending on how you intend to utilize those funds. So without further ado, I'd like to welcome our special guest tonight, our host and our facilitator, Joel Bongard. Joel is with Comerica Bank. He is Senior Vice President and Director of Anti-Money Laundering Compliance. Joel, that is a, I know, intense title. So yeah. Welcome. And tell us a little bit about you and what you do at the bank.
Sure, thanks. Like she said, I work at Comerica Bank. I'm actually out of our Michigan office. So I'm a little north of you guys, or most of you people that are online right now. But like she said, I'm the anti-money laundering director for the bank. And I was thinking it's kind of counterintuitive to what we're talking about today, because today we're talking about banking and opening accounts and putting your money in. Unfortunately, my job is on the other side of that, where I close accounts. Basically, I catch the bad guys, right, that are using the financial system to launder dirty money or using it nefariously for bad things. So that's my job, is to find the suspicious activity in accounts and kind of get rid of them and close them and work with local law enforcement agencies in that process. So, but I'm happy to be here. Been with the bank about 20 years, and I'm kind of excited to go over banking and banking basics with everybody today.
Wonderful. So happy to have you, Joel. I also want to let our attendees know we've never had this issue before, but I saw a note in the Q&A that our attendees are getting a note that the chat is disabled. So while Joel is presenting behind the scenes, we're going to get to working on that. Hopefully we can get that cleared up for you here shortly. But thank you for making us aware of that.
Okay. All right. Thank you. All right. So banking basics. So this evening, right, we're going to be discussing a couple things: the various types of banking services that are available to you to help you decide what services you might consider using at a bank or a credit union. You know, have you ever thought about opening a savings account? You ever thought about getting a debit card? You ever considered helping your children open their first bank account? Perhaps you want to open a checking account to pay bills online. If so, you probably know that to meet those goals, you need to work with some sort of a financial institution, right? Bank or a credit union. So what are we going to learn today? So a couple things from a goal perspective: identify what different types of financial institutions there even are. What types of accounts can you choose from, and which one is right for you? How do we protect your money, right? How do we ensure that your money is safe if you put it into a bank or a credit union? And then online banking. From my world, right, what I work in, fraud and anti-money laundering, online banking is huge. It's going to continue to be huge and grow. So we want to kind of give you strategies to help protect your money when using online banking. So I don't know if the chat's still open, but here's a poll question that at least you can think about in your mind's eye, I guess. And I want to stop my video during this. I'll turn it back on when we get to the Q&A. But first poll question, right? What types of services do you need most from a financial institution, right? Banks offer all kinds of services, savings accounts, checking accounts. Feel free to type in the chat if you think of any services you need. But obviously, there's a variety of services that banks offer. You can use all of them, none of them, some of them. That's okay. During this, right, we're going to explore the best ways to meet your goals in this workshop. And I see the chat's working, it appears, so that's good. All right. Well, that was a practice poll question. How about that? All right, next poll question. Where do you currently do your banking, if you do any banking? Do you bank at a financial institution, a bank? Do you bank at a credit union? Do you hide the money in your mattress? Do you put it in a shoebox? Like, where do you do your banking? Do you do it at a convenience store, at a gas station, that type of thing? All right, I see they're coming in. Credit unions, banks. Good. All right, all good answers. Thank you. All right. So let's talk about the different types of financial institutions. So there's about three main types of financial institutions. One is actually a non-banking financial institution, and that is what we call an NBFI or an MSB, all big words. Really what they are is, where can you cash your check, right? You can cash your check at the gas station sometimes. You can cash your check at grocery stores. There's actual check cashing places where you go to cash your check, right? You might see a Western Union sign in a convenience store or party store. And I caught myself, party store, it's interesting enough. I do this sometimes in the north, and to me, a party store, at least in the north up here, is where we buy liquor and beer and wine and bread and candy, and they cash your check as well. From what I hear down south, potentially a party store is actually where you go to buy confetti and balloons and cups for a party. They probably don't cash checks there. So if you hear me say party store, I probably should say convenience store instead, is what I mean. But places like that will cash your check, transmit money through Western Union, those types of things. That's a non-banking financial institution. And of course, we have banks, right? These are for-profit institutions. They're licensed to receive deposits and issue loans. And then we have credit unions, just like a bank, except they're not for profit, and they're usually owned by the members that are part of that credit union. So the advantages of banks and unions and credit unions over some of these non-bank financial institutions. So the main thing, right, is the services. Banks and credit unions offer more services than cashing your check at a gas station, right? The fees are lower usually. So that's one thing, that these places that cash checks or send Western Union are gonna have very large fees included in their transaction. They're not insured, right? So there's no insurance there. And also interest, right? So you're not getting any interest if you cash your check at a gas station and you take the money home and put it in a shoebox, for instance. You're not getting interest on that. All right. So how are they similar? Banks and credit unions. Pretty much they're the same thing, right? They both accept money, cash, checks, wire transfers. They both provide loans. You can buy traveler's checks. They're convenient, 24-hour online banking. They offer insurance, that type of thing. So pretty much banks and credit unions, right? Same kind of thing. However, on the next slide here, there is some differences between a bank and a credit union. Like I said, banks are for profit. So they make money from account fees and interest from a loan. And we'll talk about that in a little bit. They have a lot of convenient locations, right? Some of your very, very large banks, the Chases and the Bank of Americas of the world, have a lot of locations. So it's very convenient when you're out of state, that type of thing. And they're open to everybody. Everyone's eligible to join and open an account at a bank or a credit union. On the flip side of that, right, credit unions are not for profit. They share their profits with their members. However, they may require membership you must have to be in a community potentially or a certain group to qualify. However, they do offer usually better interest rates and lower account fees than banks. And however, are typically smaller in size, right? It's usually one, maybe two, maybe three branches to go to versus 100 at a bank. So there's definitely differences between a bank and a credit union. All right. And of course, everybody wants to protect their money, right? So you put money into a bank or credit union, you want to protect your money. And one of the primary advantages of financial institutions, whether it be a bank or a credit union, is that they offer insurance on your money, right? So the next slide. How are banks insured? So money deposited in accounts at banks and credit unions are insured for up to $250,000 for each depositor. So if you have a joint account, so a husband and wife have an account, each owner of that account is insured up to $250,000. So what does that mean? If a bank or credit union fails, and it does happen, right? Banks go under, they fail for various reasons. There are regulatory agencies, the FDIC for banks and the NCUA for credit unions, that will make sure you don't lose your money up to $250,000. So obviously keeping your cash at home in a safe, for instance, does not provide insurance. That's a big key there, right? Whether it be a natural disaster, such as fires or floods, or right, theft. That's a big thing. So in my line of work, right, I'm anti-money laundering. So that's how that whole thing works, is the bad guys have money and they have it in duffel bags in their house, and that's not good because somebody's going to want to take that money. So they want to get that money into the bank because it's protected and they can get to it. So just like you, we want to get your hard-earned money into the bank to get it insured. So that's a very plus side of a bank or a credit union. All right, next slide, number 9. So which products or which types of accounts are actually covered by insurance? Your typical accounts that most people use are insured. Checking accounts, savings accounts, money market accounts, we'll talk about those. Cashier's checks that you get at a bank are covered. Money orders that you get at a bank are covered by insurance. So that's a good thing. However, right, of course, you knew what's coming next. What's not covered by insurance? So there are things at a bank or a credit union that is not covered by insurance. Basically, it's your riskier products, right? So your stocks and bonds, securities that you might purchase, life insurance products, and a big key one that a lot of people don't know, safety deposit boxes. So if you open a safety deposit box at a bank, you probably would think it's insured, and whatever you stuff into that box is insured, but it's not. So just keep that in mind. I do see that a lot in my line of work, right? We see people come into the bank, especially the older generation tends to do this a lot. They'll come to the bank, they'll withdraw money, cash money, and they'll go into the safe deposit box room and they will put that cash into the safe deposit box. It's just a generational thing, I think, sometimes, but realize that that is not insured. So obviously insurance keeps your money safe. However, one of the other big things about putting your money in the bank is interest, right? Interest is what helps your money grow, and that's what we all like, and that's what we all want. So on the next slide is talking about interest. And of course, if anyone has any questions, feel free to chat as we go. I think we're going to have some time at the end to open it up for questions. So what is interest, right? How does your money grow in a bank? When your money is in a financial institution, it may earn interest. It's something we hear a lot about these days in the news. If you're following the news, there's a lot of talk about interest rates going up. There's talks about inflation and how the interest rate is changing due to inflation and all this stuff on the news right now. So interest and interest rates, right, is one of the really important concepts to understand when you're trying to evaluate and plan your financial transactions. So what is interest? It's a fee that's paid to borrow money, right? So it's collected by a lender and it's paid by the borrower. So when you deposit your money into a bank or a credit union, you in essence are the lender. You're giving your money to the bank and the bank is really the borrower. They're holding on to the money. So that means the bank pays you interest. On the flip side of that, right? If you take out a loan from a bank or a credit union, the bank is the lender and you are the borrower and you have to pay interest to the lender. So, and another thing, interest is always expressed as some sort of a percentage, right? So when you deposit your money into an interest-bearing account, meaning it pays interest, a financial institution pays you interest to keep your money with it. In that case, you're the lender, you're lending your money to the bank and the bank is the borrower. And the higher the interest rate, and the longer you leave your money in the account, the more money you're going to earn. So how does this work? So if you look on the graph that you're looking at on the screen there, the bottom, if you look at the bars, and I don't know why they chose the two darkest colors, no demand, but on the bar chart, the blue part of the bar, which is at the bottom of the bars, represents the money you deposit into your account, right, over time. The top part of the bars, the black part, represents the interest you earn on those deposits. So as you can see, the amount of interest you earn is eventually actually greater than the amount of money you deposited. This is what we call compounding interest. You just kind of deposit the same amount of money, but over time, the interest is greater than the amount of money you're depositing. So how does that really work, right? It's great. Everyone loves the concept. It sounds great, but how does that actually work? So let me see if I can kind of break it down a little bit here. So let's say you deposit $100 into an account that earns 1% interest every year. So, all right, you walk into a bank, open an account, give them $100. They say, thank you, Mr. Bongard, and your interest rate is 1%. Well, in the first year that you have that account, that $100 is going to earn you $1, right? 1% of 100. So now you have $101 in your account. In the second year, you'll earn $1.01 in interest because it's a 1% of $101. The following year you'll earn $1.02 because it's 1% of $1.02 or $102.01, and so on and so on and so on. So because you're earning interest on both your initial deposit of $100 and the interest on top of that, your money grows more quickly over time and it compounds on itself, if you will. So that's if you deposit money into an account, right? Now, similarly, when you take out a loan, right, the flip side of all this, and you carry a balance on credit cards, for instance, right, you pay interest to the bank. And since interest is always growing, like our previous example, you owe more than you originally borrowed. So in this case, compounding interest is working against you, unfortunately. So when you use a credit card, or you take out a loan, the credit card company or financial institution is the lender, right? And you are the borrower. Credit cards allow you to essentially borrow money for a short amount of time to make purchases. And each month you have to pay the credit card company back, right? And if you don't, if you do pay your balance off, you don't have to pay any interest. But if you don't pay the balance off and you have money to owe, you begin to owe interest as well. And then similarly with a loan, you borrow money from a financial institution to pay for something large, right? Like a house or a car or tuition. And you have to pay back the original loan amount plus interest. So a lot of talking there about interest. We talked about insurance, talked about interest. Now let's look at the different types of bank accounts that are available and how interest in those bank accounts might affect what your goal is, your banking goals, and or what type of account you want to get. So I'll go to the next slide. So different types of accounts. So what are some of the available options, right? And of course, don't worry if you're not ready or don't have enough money to open an account. This information that I'm giving you today will help you stay informed, and you can set a goal to open an account down the road. I just want to give you the information to get you there at least. So, right, so the main two that we probably all know and understand, or if we don't, I'm going to explain them, is checking accounts and savings accounts, right? So checking accounts are really designed for regular everyday use. Typically, they don't really offer any interest, or if they do, it's really low rate, because it's designed to have your money come in and come out and come in and come out, right? It's not designed to compound over time or to be a large balance usually. Checking accounts typically come with a debit card or an ATM card. And the debit card is similar to a check in that it withdraws money directly from your account when you make purchases at just about any store or online or anything like that. Realize though that when a debit card is convenient, you can easily lose track of your balance if you don't record your spending, or you don't regularly check your account. And keep in mind that debit cards do not contribute to building your credit as well. Credit cards will do that, debit cards will not. And also there could be consequences to misusing your debit card, including withdrawing more money than you have deposited. You don't want to do that, which may result in overdraft, and banks do often charge for overdraft fees. I did have a question come in. Do all savings accounts have the same interest rate, or can you shop around for the highest rate? No, they don't all have the same interest rate. You can shop around for the highest rate. They typically have higher rates than a checking account because they are designed for you to save your money and grow it over time. So yeah, there's different rates for sure. So I would definitely recommend shopping around for different rates. Thank you for that question. So on that topic, savings accounts, right? So what is a savings account? Allows you to deposit, withdraw money, but the financial institution may require you to maintain a minimum balance. Typically, a savings account is going to have a minimum balance, whereas checking accounts may not have a minimum balance. Savings accounts are useful for putting money aside, for emergencies, for a rainy day, because they typically do have higher interest rates than just a regular checking account. With a savings account, like we talked about earlier, you take on the role of the lender, and the bank becomes the borrower, and they pay you interest, right? So definitely shop around for that best interest rate that you can. Now, when we're talking about savings, if you have a larger amount of money, typically, you have another type of account called a money market account. You may have heard of that. It's basically like a savings account, offers a higher interest rate than a checking account or a savings account. However, the caveat and the catch is they typically have a minimum balance, a higher minimum balance than a checking or savings account. You can write checks from a money market account, but there might be other restrictions as well. You just need to look into that. Then another type of account you may have heard of is a CD, or a certificate of deposit. Again, it's like a savings account. It pays a higher interest rate typically than a savings account. However, catch on this one is that the bank's going to hold on to your money for a fixed period of time, 3 months, 6 months, 12 months, that type of thing. So you can't really touch the money, whereas you can in a savings account. Note that credit unions don't offer CDs. They offer things called share certificates, which kind of earn dividends instead of interest. Same kind of concept, same kind of deal. They just call it something else. But realize in CDs and money markets, access to your money is limited. You might be charged a penalty for withdrawing your money, that type of thing. But obviously the interest rate is higher, but there's more restrictions on those things. All right. other types of accounts. So you might have a young person in your house, right? You might have a child. I have 2 teenagers at home. And we just recently opened up accounts for them. And it's always good, right, to develop wise financial habits at an early age, establish that healthy relationship with money before adulthood. Always a good thing. So most banks and credit unions allow minors, which is defined at under the age of 18, to open accounts with a parent, a guardian, another adult, that type of thing, at any age under 18, as long as there's a parent or guardian or other adult on the account. So there's typically 2 types of accounts you can open with a minor, a joint account, right? So both the minor, the child, and the parent, both the minor and parent can make deposits and withdrawals. And sometimes, however, the minor must receive authorization from the parent or guardian to make those specific withdrawals. So that you can have caveats tied to that account so that your child just can't walk in at any time and take all the money out of an account if you so wish to have that. Then there's custodial accounts, which is a little more locked down than a joint ownership account. Open it up in the minor's name. Only the parent or the guardian can withdraw money from the account, and all transactions have to be made for the benefit of the minor that's on the account. All right. So selecting an account. So we talked about these things, right? Who is the account for? Is it for yourself? Is it a joint account? Do you want it to be for you and your husband or you and your wife? Is it for a minor? Is it for a grandparent? So that all comes into play. And obviously when you walk into a bank or credit union, they'll ask you these questions. If you just ask them, hey, I don't know what type of account to open up. How are you going to use it, right? Everyday transactions, typically a checking account, long-term savings. It's going to be more of a savings account or a money market account or a CD. And if it's a savings account, do you want to be able to access it at any time? Or do you want that higher interest rate, but then you can't touch it for a while? So you got to make that decision. And then, do you have enough money? Is it a large enough balance that maybe you want to go for the certificate of deposit, share certificate, money market account, that type of thing? All right. So let's talk about some polling questions again. Kind of some of the knowledge that we've gained so far. Let's talk about kind of a question here. So Ali has about $20,000 that he has been saving for his daughter's college fund, right? He's been keeping the money at home, let's say, but recently someone told him about safety deposit boxes at financial institutions. So he was excited. Hey, the bank's got a safe deposit box. I'm going to go put my valuables in there, and I'm going to take some important papers, and I'm going to move the $20,000 that I've been saving at home into a safe deposit box at a nearby bank. So of those options, right, what would work for Ali so that his money is protected? And I'll give you a minute to kind of put in your answers. Lots of answers coming in. So, and the good news is whatever you wrote is the right answer, because all of these options technically work, right? All of these will be protected and have insurance on them to protect his money. The question, of course, comes into play here with Ali. He says he wants to save $40,000, but he only has $20,000 saved. So he could walk in and throw that money into any of these accounts and they will be protected. But if he wants to grow his money, right, he wants to get to $40,000, maybe some of these accounts are better than others. So we talked about this a little bit, right? So from an interest perspective, savings accounts would be a better choice than a checking account, right? It's going to have a higher interest rate than a checking account. However, if he puts that $20,000 into a CD, that's going to have a higher interest rate than the savings account, right? Because the bank gets to hold your money for a long time or a longer period of time. Money market account would be a good choice because it also has a higher interest rate than a savings account or a checking account. And he could technically put it into a checking account, but obviously the other ones would be more appropriate from an interest perspective, so they can get to his $40,000 quicker than putting it into a lower interest rate checking account. So all right answers. The actual right answer would be G, all of them, but any of those would work for sure. So the second part of this, right, is okay, so $20,000 is a good start for Ali, right? But he still is $20,000 short of his total goal of $40,000 for his daughter's college fund. So let's say he's considering taking out a loan for the remaining $20,000. So his bank has offered him two options. There's option A and there's option B. Option A, a loan at 5% interest for 5 years, or a loan at 5% interest for 2 years. So the question here is, right, which one should he choose? And in this example, you know, the main difference here is the term of the loan, right? So option A is a longer length of time, 5 years. The total amount of interest is going to be higher. So which one do you think he should choose? I'll let you guys enter it in the chat. Right. Seeing a lot of B's coming through there. Although A would work too. We'll get to that. So which option would ultimately cost the borrower, Ali, less money in interest? Right, that would be option B, like a lot of people said. Ultimately, it would cost him less in interest since the loan term is shorter. He's only paying interest for 2 years. However, which option would give Ali, right, more time maybe to pay off the loan? Because you do have to pay off the loan. So option A would give him more time to pay off the loan. So you really got to do your homework and think about your financial situation and work with your financial institution to think about the terms of your loan, because they're very, very important to get right based on your individual situation, right? So interest can work in favor for you, right? So in Ali, in the first example, the very first slide, part one, he's earning interest on his savings, but it can also add debt, a debt burden, right, when he borrows money. So very simple example here, but like I said, be sure to double check with your bank or your lender to determine how a particular interest rate is calculated if you do decide to borrow money. And of course, make sure you repay everything on time and help build your credit. That will help in that situation. So far, we've learned about the benefits of banks, credit unions. We've talked about insurance. We've talked about interest, and knowledge about, you know, different account types and the requirements can help you be wiser about, you know, making financial decisions in the future. So let's say you've decided you want to open an account, and what do you have to do when you do that? So different banks, different credit unions, online banking will have different requirements to open an account. But typically, right, walk into a bank, walk into a credit union in person, you open a new account, or you can go online. Typically, you need to bring 2 forms of ID, driver's license, passport, birth certificate. Remember, these IDs have to be government issued and unexpired. And that's by law. We have to, as a bank, we have to identify who is opening the account. You're going to need to provide personal details, your address, phone number, email, that type of thing. You're probably going to need some sort of opening deposit. There's going to be a minimum amount required usually $50, $100, something like that. And if you're opening an account with other people, let's say your wife or your husband, you're going to need personal information about each person who's going to be using the account, who's going to be on the account as a co-owner, as they say. So pretty easy. It's pretty painless. And like I said, you can now do it online a lot of times. All right, so you have gone to the bank, you have opened your account. So what is it that you can do when you have an account, right? So checking accounts, like we kind of talked about, typically people use these to pay bills, go to the grocery store, buy things, they make deposits, their payroll, checks go into there, that type of thing. Savings accounts and money market accounts tend to have minimum balance requirements, often used to earn interest, right? We talked about that, interest on savings accounts. So they really aren't built to operate like checking accounts. Generally, you deposit money into these accounts to save for a longer term goal. You typically don't want to withdraw money all the time out of savings accounts because there's going to be a penalty at some point. A lot of banks, though, however, do give 1 to 2 withdrawals a month, something like that, without a fee. If you want to deposit a check, right, into one of these accounts, you can walk into a branch, give that check to a teller. You can use your debit card at an ATM to deposit the check into your account. Even now with online banking, right, a lot of banks offer it. You can just take a picture of your check, the front and the back of it, with your mobile phone, and just deposit it virtually through the app. Comerica Bank offers that. A lot of banks offer that experience as well. A lot of people set up direct deposit, if you've heard of direct deposit. So if you have a job and you get a paycheck, instead of taking that paycheck and going to the bank and depositing it, you can just have your employer automatically deposit that into your account. You know, work with your employer. There's usually paperwork to fill out with your account number and a little bit of more information, and that'll just automatically be deposited into your account. And a lot of times what you can do is you can tell your employer, hey, I want 60% of my check to go into my checking account and 40% of my check to go into my savings account. It's a really good way to start saving money into your savings account if you want to do it that way. If you want to withdraw money, you can visit a teller inside of a branch, give them your account number and ID. You can go to a debit, or you can go to an ATM machine, sorry, with your debit card. You can go to a store, right? You can go into like a CVS and get cash back when you buy something. That's one way you can withdraw money from your account using your debit card. You can also set up automatic savings withdrawals to move the money somewhere else if you so wish to. If you want to pay for something out of your checking account, same kind of thing. Withdraw cash from a teller at the bank, at an ATM. Use your debit card at a store or online. You can write a check. You can also set up automatic bill payment, which will deduct the amount you owe for a bill each month and send it to whatever payee you want on the due date. So again, the online banking, they have apps. Our bank has apps as well that allow you to set up automatic bill payment. A lot of people use that. I use that. So of course, with online banking, though, talking about online banking real quick, it does have its risks and rewards. So let's talk about that for a little bit here. Getting into my world, right? This is what I do for a living, because online banking is where, unfortunately, a lot of nefarious things happen. Crooks and criminals, right, tend to do a lot of their dirty work online, right? You see a lot of people getting scammed online, people getting scammed out of their money. We could spend hours. I could tell you all kinds of stories about fraud situations and elder abuse and things like that. But a lot of it happens online. Back in the day, people would steal checks, right? Now they're stealing your money online, unfortunately. So, you know, what can we do if we do open an account to protect ourselves from that world? So a couple things to think about with online banking. Seems simple. We talk about it all the time. You hear about it all the time, blah, 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 passwords, right? But just make sure you use a strong password for your online banking, right? Keep it secret. Don't give it out to people. Try not to use any personally identifiable information as a password. Like, don't use your birthday as your password or your birth name as your password, that type of thing. Because if people steal your identity, they will have that information. The first thing they're going to try to use as a password will be that information if that happens. So try to make it something that's not identifiable to you specifically. Mobile banking. So if you're using a banking app on your mobile device, right, try to use a different password for your banking app than you do for other things. And be sure to keep your phone locked and password protected so people don't get into your mobile banking, right? A lot of phones these days have Face ID and they're automatically logged in a lot of times. Keep me logged in, that type of thing. Try not to do that with your banking apps. Someone gets a hold of your phone, that type of thing. You don't want them to transfer your money out of your accounts. Public computers, right? If you're going to the bank, or I'm sorry, if you're going to the library to do your banking, just make sure that you're using websites that have a secure internet connection. Log out of your computer or out of your session after you're done at the library doing web banking, that type of thing. Never personal information, right? Never provide personal information to someone over the phone or via email that's asking for it. That's how a lot of these scams are, right? It looks like you're getting an email from your bank and they're saying, hey, could you give me your social security number? Hey, I need your date of birth. I need your personal information. If that ever happens, just call your bank directly and talk to them instead of answering an email. We call that phishing. There's a term you might have heard in the fraud world. People are phishing for information and then trying to access your accounts. And obviously log out of everything when you're done. So online banking is very convenient. Everybody uses it every day. I'm not trying to scare anybody away from it. Just be careful. And safety is obviously very important. All right. So a couple of scenarios here to talk about real quick. Let's go through these. So George is very disorganized. To make things easy for himself, he uses the same password for all accounts and devices, right? What could George do better? George could develop a system to keep track of passwords, right? So he doesn't use the same one for every single account. Write your passwords on a notebook, a piece of paper, keep that in a safe place. There's password managers to keep track of passwords. I know it's these days, right? Everything has to have a password, so it gets hard to change different types of passwords and things like that. There's a question that popped up. There are a lot of scams happening with Zelle, right? Would you say Zelle is more secure than Cash App? So any kind of app on your phone, you got Zelle, you got Cash App. All the different Cash Apps are very convenient, right? You can move money very quickly. They are new, right, to the industry, so we're still learning. Specifically to your question, I would say Zelle is definitely more secure than Cash App. Zelle is backed by only large financial institutions, and you only can use Zelle by going into your personal web banking at that financial institution, whereas Cash App is kind of like Venmo. If anybody's heard of Venmo, it's kind of open. You just kind of bring up the app and you move money, right? So Zelle's a little bit more secure than the other Cash App and Venmos, to answer your question. The second one here, Amira, sorry, creates account security questions using personally identifiable information, like the street she grew up on, place of her birth, and her birth name, right? So a lot of times they'll say, hey, if you ever forget your password, why don't you answer some questions here so we can get your password back for you, right? I would just recommend using fake information in there, right? When they say, what street did you grow up on? Try not to put the actual street you grew up on. However, I do get it. You got to keep track of those answers. I've done in the past where I made up stuff and then I forgot what I made up. Obviously, I remember the street I grew up on, but I don't remember the fake street I grew up on. So just trying not to get your personal information out there, right? This third one, Ming loves the convenience of mobile banking, and she often checks her account when she's at a cafe or restaurant, right? We just want to be careful of unsecured networks, right? We want to make sure that we're using secure websites, secure Wi-Fi. Make sure you have to log into the Wi-Fi. You're not using public Wi-Fi to do your online banking. If you want to use public Wi-Fi to, go on Google, feel free, but try not to do your online banking at a unsecured Wi-Fi hotspot, something like that. And then the last one, right? We've talked about this. Sam doesn't have a computer, so he does his online banking at the library. Not a problem. Just make sure that you log off right before you leave. You don't use any autofill kind of capabilities of that computer, so it doesn't automatically type in your social security number the next time a different person comes in, that type of thing. All right, so in summary, banking basics hopefully gave you some solid foundation here for new terms, tools, knowledge, habits for building a healthier financial future. So if after all this, you're planning on opening a bank account, I get it. Sometimes it's hard to get started. It can be discouraging. You got to come face to face with your financial reality sometimes, or it's even difficult to stay motivated at saving money. Completely understand. But hopefully, being informed is the key. Ask questions when you walk into a bank. I know it can be intimidating, but they're there to help you. The more knowledge you have, the sounder choices you're going to be able to make. So I know that was a lot of information. Is there any questions? I think we do have about 10 minutes left or so feel free to ask questions, whatever you like.
Yeah, first of all, Joel, thank you so much for covering all of this information. That was incredible. To our attendees tonight, like Joel said, this is a lot of information that he just covered, but it's really critically important. We've seen some great questions come in so far. I want to call out a couple of questions that came through the Q&A feature. So I'll pitch these quickly to you, Joel, and then to our attendees, any other questions that you have, we have the time. Let's get them answered. So send them in the chat or in the Q&A and we'll get to those. Joel, our first question came in from Cherie, and she'd like to know, what is the difference between money market accounts and money market funds?
Right. So the money market account would be your account that you have. We talked about, that it's a higher interest rate, but it's going to require a higher balance. Money market funds are more an investment type product. So it really depends on what you want to do. It's kind of dictated by market. It's a little more on the fund side. And the actual money market account is more based on interest rates. So it just all depends on what you want to do from a building your wealth, if you will, perspective.
Excellent. Okay, our next question came in from Isabel, who would like to know, as the Fed raises interest rates, will that be reflected in Comerica's saving and money market accounts?
It will. It all depends, again, on the product and how it is tied to the interest rate, the national interest rate. So we talked a little bit earlier about making sure when you borrow, when you get a loan, when you get an account, you want to know how that interest rate is calculated. Different products are calculated differently. Some are tied, not to get too technical, to the LIBOR rate and the different rates that exist nationally. And if they are tied to that, then yes, your interest rate could go up, but it may not, based on how it's calculated. So just the most important thing to know is that understand how your interest rate is calculated before you open an account or get a loan.
Really good tip. Excellent. We have a question that came in regarding income, and for our attendee who submitted this, I don't have a name for our attendee, so if we're not hitting the mark here, please feel free to clarify. But the question came in, Joel, about products that might be good for an individual on a fixed income. Can you speak a little bit about, for individuals that might be on a limited income, if there's maybe a product that might be better to consider than others, or that's not as much of a consideration?
Well, again, it kind of depends on how they want to use that income, right? I'm assuming if they're on a fixed income, they're using that money for daily living. Probably a checking account would be best. But if you can open a checking account and a savings account, or a CD, and put some of that money away to have it grow a little bit more, that would definitely be helpful. But it all comes down to how you need to use that fixed income, right? If you want it to grow, there's other products. If you want to use it for daily purposes, then a checking account would probably be best.
Yeah, really great point. And I think that's a really important fundamental point that Joel has covered in today's presentation, right? Of really thinking about what is the purpose of the funds that we want to put into these vehicles. That really is going to inform which of these vehicles, or multiple of these vehicles perhaps, that we choose to store our money in.
Right.
Yeah. Please continue to send us any questions that you all may have about banking or anything like this on this topic. And I'll say, just kind of quickly on the home ownership part of things, having a bank account and having the right kinds of bank accounts is really critically important as you set out on your journey to buy a house. We do a lot of coaching and counseling here at Habitat. If you're working in our program with one of our counselors, then you might have heard this already. We find that, overwhelmingly individuals that we work with who are banked oftentimes exclusively have checking accounts, but oftentimes we're not seeing saving accounts. And so that's a really valuable vehicle as you think about saving for the upfront cost of a home. And there's a down payment, closing costs, all the above. And so this is a really important topic to think about if you're in process of considering homeownership, for sure. And to Joel's earlier point, I would say too, also consider, while some of these accounts will allow you to be able to grow your money significantly over time, those might not be the best vehicles for storing your money if you're looking to buy a house in the next couple of years, right? Something like a CD, for instance. Oh, we had a question that came through, so we'll get to this. Elizabeth, she wants to know, how do you open this account and where? Elizabeth, could you be more specific which kind of account you're asking about, perhaps? And I'll say, Roderick, we see your comment. Thanks for giving that shout out in the chat. Really great information. I'm glad to hear that. Awesome.
While she's answering that, I will add to, if you're trying to save for a house, right? The one thing I would recommend is, if you can, is to automate some sort of way to save your money, right? So you kind of set it and forget it, if you will, and you don't miss it. So if you are getting a payroll check and you're depositing that automatically, put some of that away into savings account every month, so that you're just growing your savings account without you really thinking about it and not really missing the money. Instead of you having to move money back and forth, that really kind of helps grow savings as well.
That's an excellent tip, Joel. Thank you so much for calling that out. We are big believers at Habitat about automating your savings. Yeah. And that's huge. A lot of us do this already for savings, like retirement savings, for instance, maybe through contributing to a 401k, 403b, something like that. But this is a really great chance too to be thinking about how we might leverage automation, even if it's, y'all, $50 a paycheck, $25 a paycheck, whatever the case might be. It adds up over time.
Right.
Sure. And Elizabeth, I'll say to your point too, while you're thinking about kind of details on that question, just to clarify, if you're on today's call and you're thinking, okay, I know that it's really important to be banked, I understand this now, but I'm not really sure where to start. Maybe I don't have a bank account open in my name, or I'm looking to open one for a minor, and I'm looking for some direction on that, you can reach out to your Habitat counselor, and we can direct you to some of our partners, including Comerica, that we work with, who are safe and trusted partners, who have many of the products that we've reviewed tonight. So feel free to reach out to your counselor, and we can help provide some guidance and support for that as well. Okay. So last call, any other questions before we wrap up tonight? If you have them, send them in. If not, Joel, I want to thank you again on behalf of our entire team. Oh, people always wait until last minute. Here we go. I love it. It's not too late, y'all. Okay, Sherry wants to know, do we have to pay taxes on interest earned from savings accounts?
There's a minimum amount that you do have to pay taxes on. I don't necessarily off the top of my head know what that is, but I think you do, yes.
Thank you for answering that. Let's see. Okay, we answered the Zelle question. Okay, I think we've answered everything. I think we're good. So Joel, back to my thank you for you. Thank you so much for joining us here tonight, taking the time out of your schedule. We appreciate you and your guidance and your expertise in this area. Hopefully we have the chance to have you back.
Yeah, absolutely.
Yeah. To all of our attendees, thank you all so much for taking the time out of your schedules to join us tonight. We hope you learned something very valuable. And be sure to check out the website calendar. Our team is refreshing that in real time. So be sure that you check that calendar over the next couple of weeks. You'll see some of our classes that we've got up coming over the next month and 2 months that you definitely are not going to want to miss. So hope to see you guys there. I hope everyone has a great evening. Take care and stay cool if you're in Texas.